Over the last week, Bitcoin has jumped up over 34%. In this video, we're going to be taking a look at the macro position for BTC. We'll be jumping into the on-chain data, taking a look at anything that's going on there and whether we should be concerned or whether or not we can kind of be a little bit more bullish on the medium to longer term views. Now, as I get into this video, if you find it useful and informative, smash that like button. I do appreciate that. If you happen to be new to the channel, then why not go ahead and subscribe, tap the bell, selecting all the notifications, and you will not miss another video update. If you haven't yet joined us in Discord though, guys, you're missing a trick. Check it out, linked in the description down below. It's a fantastic community talking crypto 24/7. It's completely free, and I don't think you'll be disappointed by what you find down there. And if you are looking for a little bit more from the crypto space, why not check out the Patreon services linked in the description down below, or the YouTube memberships via the join button down below. We offer a lot more for our members via Discord, everything that's is fantastic, from AMAs twice weekly to trading ideas for traders and a whole host of many more benefits. If that sounds of interest to you, check it out, linked in the description below. Let's make a start with this one. We've got a fair few things to kind of cover off. Okay, we're going to be taking a look at the charts. We will be jumping down into a few different views. We've got smart money concepts, for example, Elliott wave theory, and just generally having a look at the macro picture. We'll also be taking a look at those on-chain metrics. Okay, so let's go ahead and start there. I think it's probably a good place to kind of think about with everything that's going on with the price. Is there are a significant amount of demand increasing for BTC, for example. So let's go over to our data. Now, our data here, top right-hand corner, this is where we like to start. It basically shows us from the 1st of January 2023 through to yesterday, which was the 15th of March 2023. It shows us the inflows, the outflows, and the difference between the two of those numbers. Okay, so we've had 2.1959 million Bitcoin go onto the exchanges, and we've had 2.1758 million coming off the exchanges. This means that there has been 20,000 more Bitcoin going onto the exchanges than has been coming off. Now, that might sound okay. That's okay. It's not a huge number, right? It's actually quite neutral. We could argue it's quite neutral, but this number has been growing quite a bit, and it has also been volatile. It's flipped between a more bullish state and a more bearish state quite a bit, but it's still reasonably neutral because the numbers are not overly impressive, right? So what does this actually tell us? It tells us that more people are putting Bitcoin onto the exchanges than they are willing to take it off. Okay, and this is alarming for a couple of different things. One, do you trust the exchanges? We've seen a few things go on with Voyager and FTX, for example. Do you really trust them to be looking after your cryptocurrency? That's number one. And I think that's actually probably a point to bring up. If in the description down below, there's a link to Ledger. We are affiliated with them, and it does support the channel if you use that link. If you haven't yet got yourself a hardware wallet, I would say do some research. There's many different brands out there. We like Ledger, we use Ledger, and we can support with Ledger queries and so forth. But, ultimately, the main takeaway here is that you should really be self-custodying your own cryptocurrency assets, right? And a hardware wallet or a cold storage device like you get from Ledger with a Nano X, for example, or S, helps you protect yourself against those third-party risks. It's not 100% protection, but it kind of removes some of those risk elements, such as exchanges. So linked in the description below. The only thing I would say, guys, is when you are looking at hardware wallets, is you buy it directly from the manufacturer, because there are some fake devices out there on third-party sites like Amazon or eBay. Just do yourself a favor and buy it directly from the manufacturer for peace of mind, if anything else. So when you see a lot more Bitcoin going onto the exchanges, like we do here with an extra 20,000, we know that people maybe are not applying the same risk management principles that you might want to see, specifically after we've seen the space get shaken by FTX and Voyager, for example, right? So this data tells us that there's more people putting Bitcoin onto the exchanges. Now, if they're putting Bitcoin onto the exchanges from a cold storage device, well, they've got the cold storage device, but they're moving it to the exchange, well, that tells us that they're trying to sell their Bitcoin. Okay, why else would you put it onto an exchange unless you're trying to offload it? And we've got some data that supports that that is exactly what is going on. Okay, so not only do we see more Bitcoin going onto the exchanges, we also starting to see some really interesting things inside the data. Okay, so knowing that basically there's a flow of Bitcoin going onto the exchanges and people are trying to get rid of their Bitcoin, that is going to be deemed bearish, right? We're going to put a little tick in our bearish box for that one. We can also see over here on the Bitcoin exchange balance, we can see how this is also getting a little bit of an uptick after a recent pull to the downside. We can also see over our 30-day average bars, it's incredibly neutral, right? We're just hovering on the midline here. And this is not bullish, it's not bearish. So over a bigger period of time, all we can say here is there's a little bit more Bitcoin, just a little bit more Bitcoin going onto the exchanges and is coming off. So we're not going to tick the bearish box for this one, but I'm also not going to tick a bullish box for this one either. I think essentially this is just telling us that the market is incredibly fragile, neutral, and could go either way. And that doesn't really help us. And so we're going to kind of park that, and we'll see if there's anything else inside this data that helps us understand whether or not we are going to be bullish or bearish on the kind of short, medium, or long term. I'm not going to talk about the hodlways. For the most part, I see that this is okay. There's nothing terribly too much going on there. So let's move on to the inflows and the outflows as a line graph. Here we can see that there was significant surge upwards recently, right? As prices surged up over that last week, we've seen inflows and outflows also surging upwards. We can see that for the most part, there was a little bit of demand basically soaking up a bit of Bitcoin. We saw Bitcoin coming off the exchanges, not going on. And right now, over the last couple of days or so, we actually see that there's a lot more in the way of inflows than there are outflows. A lot of people now loading up the exchanges rather than coming off the exchanges. So there were pockets of buying that was occurring and withdrawals that were occurring, and now that's flipped around and turned. And overall, we have a 20,000 more Bitcoin gone onto the exchanges. So all those accumulations that were happening beforehand have been wiped out by bigger players. For example, we saw 78,000 Bitcoin going on the 14th of March. We saw 71,000 going onto the exchanges on the 13th of March. Yesterday, we saw 44,000 Bitcoin go onto the exchanges. So it's important that we kind of reflect on the fact that we have seen a big surge with the amount of inflows versus the outflows. And we can see that the inflows significantly have outpaced that of the outflows. And one of the things that we have to bear in mind is the very definition of a bull market or a bear market. For a bullish market, the very definition is that when demand outpaces that of the supply. Okay, and right now, the supply is outpacing the demand, which is the technical definition of a bear market. However, this is only day on day. This is not aggregated to a much bigger macro piece, right? And over a macro time period, I'd say it's actually a lot more neutral. And that's more concerning because it means the market's fragile and could go in either direction. And it doesn't really take a huge amount to create huge FOMOs or huge FOMO activity and push that price upwards. Likewise, it doesn't take a lot of negativity to kind of make the market fall down either. So it's actually a really delicate place that we are right now. Now, as I move over into wallet counts, this is where things start to get spicy. Okay, so here we have BTC Dust. BTC Dust essentially is a wallet that has over 0.01 Bitcoin. Okay, so basically the black line here are the number of wallets that have over 0.01 BTC. And we can see up here it's actually hovering around 11,661,961 wallets. So there's a lot of wallets that have some Bitcoin dust in it. These are, as I said, the most vulnerable retail investors essentially. And we can see there's a small uptick here, but nothing too impressive. But this is after losing 100,000 and then gaining a significant amount more. So again, there's that narrative from large influencers that are basically kind of trying to rally up some retail money to FOMO into the market. And that's exactly what I think we see here. We see a lot of FOMO action from the more vulnerable retail investors, and they're loading up their positions. But this isn't what I find interesting. What I find interesting comes in the shape of retail wallets, specifically these retail wallets. So over here we have BTC Krill. BTC Krill is basically a wallet that has over 0.1 Bitcoin, and we do see a small dip to this wallet. Now, this isn't unusual. This is something we've seen a couple times before. Okay, so this could be the start of something bigger, but for now it's not unusual. We see this from time to time. Okay, we go from 4,268,486 down to 4,263,633. So essentially we've lost about 5,000 wallets, something to that effect, over the last 24 hours, 48 hours or so. So it's interesting that we are seeing this decrease here just a little bit. Now, the one that I find the most interesting comes in the form of BTC shrimps. These are basically wallets that have over 1 Bitcoin in them. And we actually see a reasonably significant pull to the downside as price surged upwards. So there was definitely some selling occurring at the retail level, which I find quite interesting. This is something I've been waiting for a very long time, and yet we're only really maybe starting to see something. It's too soon to really know if this is exactly what I've been waiting for, but it gives me encouragement to see that maybe some profits are being taken taken by retail investors, which is good to see. This is something that we saw way back in January as well. We saw a little dip before we continued to push upwards. So this little dip here is interesting. 988,751 down to 986,722. So we lost 2,000 wallets here for the shrimp side of things. But the dolphins have gone the opposite way. So again, these are all retail investors acting emotionally, in my opinion. And our high net worth individuals, however, have actually decided that they're going to go up with the price. So again, they're buying the pump. And that's never going to end well, in my opinion. But it's interesting, right? So they're buying as price goes up here. They actually moved up quite a bit since the beginning of March, right? So the 6th of March, there were 155,476, and now they are 156,118. So we can see that we moved up over 1,000 wallets that have over 10 Bitcoin in them. So a significant surge for these guys. Unfortunately, I'm not so sure that the dolphins really are on the right side of this one. Buying a pump to the upside is not a good idea. You usually buy the dips, and there's a reason that that saying exists. So the dolphins, I hope you're going to fare well, but I don't think so. I think this is probably people panicking, moving their money as a high net worth individual, uninsured money from a bank, maybe being moved into Bitcoin rather than actually keeping their uninsured funds in the US banks, for example. That could be one of the many reasons that this is seeing an upward swing. Whereas, you know, your regular retail investors do not have to worry about uninsured funds in a bank account, whereas a high net worth individual would. So maybe they're parking that in Bitcoin. Could be a surge or could be a reason for this surge to the upside. So interesting stuff. We're starting to see a little bit of a shakeout at retail level, with the exception of the high net worth individuals. Let's go up to the institutional level investors. What's going on? Well, we can see that the sharks are buying up this dip, right? We're coming down and they started to buy, and they've been buying up at the moment. Now, the sharks, unfortunately, have made mistakes in the past and have also made some fantastic trading ideas. Now, the sharks are a wallet that has over 100 Bitcoin. And I look at the sharks as traders. They follow the price action, and they sometimes get it wrong and they sometimes get it right. And they actually got it absolutely right with the recent pump to the upside that we saw in January, February, and March so far. They were accumulating at mid to end of December. And they were accumulating a lot. Since the actually initial pump to the upside, they started taking profits, and now they're buying up again. The question I have here are these traders going to be on the right side of this one? They've done this wrong in the past. They could be doing this correctly this time. I don't know. But it's an interesting tell. There's the wallets here do go up a fair bit. So 15,999 up to 16,077. So a reasonable chunk of wallets now holding at least 100 Bitcoin. So we'll keep a close eye on that and see how that kind of goes. With the whale side of things, a small uptick, nothing too major. Again, you see this from time to time. I'm still waiting to see whether or not retail investors are going to sell out a lot more so that the whales can accumulate. I think that this is ultimately just probably liquidity grabbing to a degree, but we basically go up from 2003 wallets to 2009 wallets. So an additional 6 wallets that have over 1,000 Bitcoin in them. Kraken, very neutral, no changes. So from a wallet count point of view here, I am keeping a very close eye daily on what is going on. I think that it's good to see some profits getting taken at the retail level, although I'm not 100% confident really that the dolphins are going to be aware of what's going to unfold after piling in so much cash like this. This is basically going to provide exit liquidity, and in this particular case, a transfer of wealth appears to have occurred between the shrimps and the dolphins, if you just look at it at that level, or ultimately the shrimps and the whales. The Bitcoin ultimately, so there has to be a buyer, there has to be a seller, right? It is a sum-zero game. So if someone is buying, someone else is selling. If someone is winning, someone else is losing, right? So when we see wallet counts going down, we see huge inflows to the exchanges. I think that we can start to consider the fact that maybe we're going to start to see the price cool off a little. Okay, that's kind of where I think things are going. I'm not necessarily saying new lower lows, although I do think that is something that we have to consider, considering that our whales have not been able to get into the market yet. So let's bring that up in a 365-day view. This is what it looks like. Okay, so if November was the bottom, then unfortunately the whales were selling at the bottom, right? You can see the black line here. was decreasing rapidly as that bottom had formed, right? So if the bottom was in, then the whales made a catastrophic mistake, and of course, they're going to have to buy Bitcoin at a higher price, right? That's the retail kind of thought pattern. Unfortunately, that's not likely to occur. Instead, we're probably going to have to go down into a new lower low, and retail is going to have to sell their Bitcoin at a cheaper rate to the whale investor, and that's usually and historically the way that this thing has gone. There's a reason that whales control the market, after all. This is something that we spoke about in June, when so many people were also confident that June was the bottom. We were also looking here and saying, okay, well, it doesn't make sense that the whales are selling at the bottom, right? Does it? As price goes up from the June lows, the whale counts are going down, and that's something that we see over here, right? We can see that the bottom came in and the whale counts are going down as price goes up, and we're hitting these low areas. So our analysis here still remains very much true. Until Bitcoin whales and institutional level funds are in Bitcoin, I'm not really expecting big price movements for Bitcoin. There are, however, a couple of things that do change this. And these are pretty big fundamental things that could maybe change the whole analysis of what I've got here. I'm not 100% convinced on it, but I'll share it with you anyway. And this is the idea that banking is struggling. Okay, we can see this. We know that banks are going bust. Well, collapsing, I should say. And then there's bailouts for them. Now, we do know that inflation is also a huge problem. So if you can't keep your fiat in the bank because, you know, ultimately the bank might collapse on you, and you've got inflation eroding the value of your Bitcoin, where are you going to put your wealth? Historically, that's been metals such as gold, silver, platinum, but maybe there's a change here for it to go into Bitcoin. Who knows, right? There's lots of speculation that that's what's going to happen. Again, I still believe that you would have to see a very significant surge at the whale level before that can occur. Okay, ultimately, we're talking about big money, uninsured money from banks that needs to come into an asset that could, you know, basically save them from inflation. And I'm not seeing yet in the data any big funds coming in here. We have some wallets that have 100 Bitcoin in them, they're going up, and we have some wallets that have 10 Bitcoin in them, they're going up. But we're talking, you know, billions, right? So where does that money get parked, right? And is that going to be coming into BTC essentially? So at the moment, the data doesn't suggest that this is occurring. We just have the regular stuff that we've always been talking about. So I'm not convinced that that's going to happen. It's going to be interesting to see what the Fed do and how they kind of take things. But ultimately, big money here hasn't entered into Bitcoin, at least not yet. Let's jump down into the charts, right? So where do I sit with all of this? At the bigger macro level, what has changed? Unfortunately, not a lot. So on this daily chart here, Bitcoin paired up with Tether on the daily, right? Binance as a data source. We still remain in a bearish state. We haven't broken this bearish state. Now, we did have a change of characterization when we broke higher than this level here. Okay, this was 21,211, but unfortunately, we didn't close there. And because we didn't close there, we never got a bullish change of character. Okay, we have our bearish change here, and we have our bearish break of structure here, and we almost got a bullish change of character up here, almost, but it didn't get closed. And as such, therefore, we're still in this bearish state. Our structure hasn't been broken from a smart money concepts point of view. So we're very, very close to breaking that and actually starting to see some kind of bigger bullish tell on our daily chart. However, it still remains bearish for now. So it's going to be interesting to see how that plays out. Ultimately, we're above the 50 and the 200 EMA, although we had a death cross as well on those two. But ultimately, we did see that pull back actually after that. To be fair, we did see that pull back and we got that cross. Right now, we remain where we are. It's going to be one of those. We'll see how that kind of goes over the next little while. But for me, I think that we're reaching exhaustion. Not only can we see that on our oscillator down here, the cheeky crypto SRSI, we're overbought on the weekly, daily. We're overbought on the 20, 16, 12. We're not overbought on the 8 hour, just coming out of there. Oversold only on the 4 hour and overbought on the 1 hour. Ultimately, we're looking for corrections to the downside. You can see on the daily chart, 19K is also a fair value gap that was left behind. So there's going to be some interesting stuff that occurs here with Bitcoin. Like I said, we've got some selling pressure occurring from retail investors now, some exit liquidity. Now, if retail investors are selling their Bitcoin, then we can see, institutional level investors may be coming in. It's going to be interesting to see how that plays out. Now, from an Elliott Wave theory point of view, we still remain true to our WXYXZ. As I said the other day, the only way that this gets broken is if we can push up higher than $32,917.17. Okay, so that's kind of what we're looking for. We're looking to see if we want to be bullish on Bitcoin and crypto, then we want to be pushing up higher than basically 33k. Okay, if we can get higher than that area, then we can prevent this scenario down here. And this is the only scenario I can see that gets us, at the moment anyway, to a 10k Bitcoin. Okay, without this structure, we'd have to move up quite significantly and then correct down later. Okay, so you would basically not hit a new all-time high and then come down into new lows maybe in 2024. Again, it would be a really, really bearish situation for years, right? And no one really wants that. So you arguably, what you really want in an ideal world is you want to come down here, you want to hit this target, and then you just want to move on out and be done with it. Instead, what's happening here is a lot of retail getting impatient, trying to kind of push the market upwards, and really that has consequences for a much prolonged bear market, because you're not really seeing big funds coming in until you come down into these lows where retail investors sell the Bitcoin to them, because someone has to sell Bitcoin for someone else to buy it. Okay, so until retail investors who currently hold a lot of Bitcoin sell that Bitcoin to the institutional investors, you can't really expect price to move up, right? So there's a limit, there's a ceiling to how high retail investors are going to be able to push Bitcoin, unless, of course, we do see a huge banking collapse and people are like, where do I park my money? I'll park it into Bitcoin. So unless that happens, I really don't think there's going to be a new all-time high until institutional funds are coming into the space. So with that being said, the quick fix here, essentially, or the best fix in my mind, is to come down into these lows, get retail shaken out of the space, and then get the institutional money piling in. Once the institutional money is piled in, then you're going to see a huge push on getting this up into a new all-time high. Okay, all the media outlets will start be talking about it in a positive way and how everyone should have exposure to Bitcoin. And then you'll see all these mainstream medias doing interviews with CEOs of the fintech firms and all that kind of stuff again. Okay, and it'll be done in a positive way rather than a negative way. So a 𝗕𝗪𝗀𝗀𝗀𝗧 would be a fantastic way to finish that off. Failure to do this essentially means that we probably have to push up into, fortunately, maybe that kind of like 40, I can't really see us pushing up into 50, but there's resistance there, and then down like that. And you end up with this mini bull market in the middle here. You might have some fantastic gains, but it's not going to be new all-time highs, and then you come down into that. Okay, and again, it's pure speculation because we don't know, but we haven't got a trend structure upwards, which means I'm not thinking of this as a wave 4 situation with a fifth wave movement to the upside. It could be maybe diagonal over a bigger period. That's also possible, and if we do print a large diagonal here, I would be bullish, right? I would be incredibly bullish on Bitcoin. In fact, yeah, I'd be incredibly bullish on Bitcoin after the retracement from that diagonal. So if we start turning this into a diagonal and this is not an X wave, right, then I would say, yeah, this isn't going to happen, right? We can forget this whole idea down here and we can start thinking about a correction down to maybe 18k, which will feel like brutally murdering people, but that's essentially where it would go. You might see a lot of retail coming out because they fear it, and then institutional money coming in. And if that is the case, then you'd end up with this kind of scenario like this, and it would be fantastic for Bitcoin to push up into those ranges where maybe 100k could be possible. Okay, but you know, we aren't there. These are all things on ideas and speculation with no bias or factual information behind it, right? Essentially, at the moment, what we need to do is we need to be patient enough to let the data play its course and for us to kind of map out the structures as they appear. Ultimately, we're still remaining bearish at the moment. We almost got into a bullish state on smart money concepts, but Elliott wave theory needs to push up higher than 33k in my opinion. And if it does that, then that's going to be fantastic. And I would be looking for a diagonal here. And it's possible that we do have diagonal structure at a bigger macro piece, because that would be broken up into a 3-wave structure. So you'd have 3, 3, 3, 3, 3 waves, making 5 in total, which will basically allow us to look at the entire thing as a wave 1 situation, and that would be a really good positive for Bitcoin, but we're not there yet. So for now, we have to be patient. We have to kind of analyze the market, analyze the data, and kind of come up with the most probable scenarios. Now, I'm going to leave the video right there though, guys. If you found this useful and informative, smash that like button. I do appreciate that. If you're new to the channel, go ahead and subscribe, tap the bell, select all the notifications, and in doing so, you will be kept up to date with everything that we do here at Cheeky Crypto. If you haven't yet signed up to BitGet, check it out, linked in the description down below. They're running some fantastic offers at the moment. Deposit $50 USDT, get $10 in cash back, and they also do rewards all the way up to $8,000 as well. We're also running a competition down in our Discord server with BitGet, where we have funded a 100 USDT weekly prize. Basically, this resets every single week, Monday to Sunday. The person who has the best ROI percentage will win, and we'll look to adjust the prizes accordingly as this competition grows. So if you're looking at trading, why not sign up with BitGet and take part in our competition down in our Discord server. Until the next video though, guys, have a fantastic day.